Okay, good evening, everyone. Welcome to RadioSilentPlay.com. I'm your moderator for today on August 7th, 2014. Okay, today we're having a little bit of a special one-on-one. We're giving an example of how we actually do a one-on-one. And I have the pleasure with having one of our students slash members, Kafka. All right, Kafka put out a video, two videos actually, where he actually started with just $200 and he's since then broke over $10,000. Okay, but with that said, he's had some ups and downs. Okay, so I just want to welcome Kafka on with us. Okay, before I do that, let me just briefly give you guys a disclaimer. I just want everybody to know I'm not a financial advisor. Please do your own due diligence before trading any stock or option. Trading stocks and options require lots of risk. Okay, Kafka, I'd like to welcome you. Good evening.
Thank you very much.
Okay, so what we're doing now is we are going to start doing one-on-one services for people that are our members. One of the most important things is to have what you call a mentor. Okay, and a lot of people don't understand the concept of mentorship, but people have to understand that in order to be successful, you must have instruction. You must have an education. Now, education not in the regard of institutional education, that which a lot of people tend to do. Okay, a lot of people may know who Warren Buffett is. Okay, Warren Buffett had a mentor, and I don't know if many people know who his mentor was, but Warren Buffett had a mentor, and his name was Benjamin Graham. Okay, so if you guys want to research Warren Buffett and Benjamin Graham, you can do so. Okay, but it's very important for people to understand that when you're going to do something, whether it's construction or whether it's going to become a mechanic, okay, you want to get the best instruction from the best person. Okay, now I by far am not an expert in anything, but what I do, okay, is pretty much stay disciplined and create a strategy that can minimize risk and maximize reward. Okay, before I start talking about that, I just want to explain a little bit about why we're here. Okay, we're doing this one-on-one with Mark because he's been having some trouble and difficulty getting into stock and learning where to get out and where to actually look at some exits. So he had asked me, okay, to go over some level 2 readings, okay, also look at some charts, okay, and explain a little bit of, the scenario and the psychology of going into a trade. Okay, I think this is very important for traders to understand. Okay, I'm going to start off with, asking Kafka a couple of questions. Okay, you don't have to give me a direct number, but you can give me a little bit of an estimate. Now, as a trader, okay, you have to understand what your liquidity is and your limits, because you have to be able to manage risk. So my first question to you is, okay, Kafka, are you working right now?
No.
Okay, so you're currently unemployed. Okay, so trading is a primary way of getting money. Is that correct?
That's correct. Yes.
Okay. So now, how much liquidity are you working with right now? How much money can you afford to trade?
You mean how much I have in my E-Trade, or how much I go into?
No, just a rough estimate of how much money, okay, you're trading with right now that you don't touch for expenses, that you just have in your E-Trade to create money.
Approximately 6,500.
Okay, so 6,500. I'm sure that you're taking money out to pay different things and
That's correct.
Bills and stuff like that. All right, good. So with that $6,500, okay, so you usually, when entering a trade, okay, do you use a specific number that you trade with?
I do.
Okay, so you do use, is it a percentage of how much you have in your account, or is just a number that you came up with that you feel reasonable in trading?
Yeah, I just came up with the number to feel I realized that it's between, not little and not too much. Uh,
Okay.
I'm using approximately $500 per each trade.
Okay.
So I'm not going thousand since right now I have only 6,000, not much liquidity, and I'm now going 300 because if I would have at least 4,000 or 3,000, then I would risk 300. But right
Right.
now I
Right.
feel like I'm between, so 500 is pretty reasonable uh, to get in a trade.
So what we can safely say is that you're using pretty much 10% of your liquid net liquidity in your account. You're just risking 10%
10%, yeah, yeah.
per trade, right? That's a reasonable number. And the reason I ask you this is because a lot of people don't understand how the big money or what I call the smart money work. Okay, the smart money, okay, is what you guys understand them as rich. Okay, and there's a little bit of a story behind that. I've been to certain seminars, and there was a person that was actually talking about this, and he was talking about secrets of the rich. And one of the main points or the talking points about the secret of the rich is having a mentor. And what does a mentor bring to a person? Okay, it's three things. Okay, that's safety. Okay, the flight to safety, which a lot of people know what that is in psychology terms. It brings them security, so they feel more secure, and knowledge. Okay, these are three main aspects of what a mentor brings. And it's very important for traders or anybody in any type of trade to understand that, because if these are the secrets of the rich, okay, and this is what they're using, they don't want you to know this. Okay, so it's pivotal. It's a pivotal thing to have, is to have a certain person to follow, or a guide. And I think a mentor is very, very important. So that's the biggest secret. So one of the secrets of the rich. Okay, and another secret is the rich. What they see is the big picture. Okay. Now, what I mean for the big picture, okay, is what is it that you want to achieve? What's your main objectives? Okay, so my question to you, Mark, what is your main objective, or what is the big picture when you trade?
Um, you mean in the long run, like in a long run? I just want to be financially free.
Okay, you,
Honestly, that's my long term. I do have a lot of potentials of, I mean, actually, will I would say, of investing my money into a lot of assets as I can, to be financially free and have a lot of assets. That's my goal.
okay, that's very, very interesting. Now, if you were to ask that to certain people, okay, they wouldn't give you that response. And I think that was and like I'm
Honestly,
saying,
okay,
yeah,
go ahead.
I'm
Sorry.
sorry. No, go for it.
Honestly, I ask these questions to people. I ask this question to many people, and they honestly the only answer that I heard from most of the people is that they all want to live with the moment. They don't think about the future. They just want to spend the money now on things that they want rather than they need.
Right.
I know a lot of people, even my cousins, family, friends, everyone around me. I feel like all they have in their head is not the future, but the present moment, how they can buy things to show off the latest phone, the latest headphones, and it just and go out to expensive restaurants, bars, and things like that. But and if I ask anybody, what about the long term? What about if you invest somewhere, you want to buy silver, gold? They look at me like I'm an idiot.
Right.
They look at me like, what are you saying? You
Right, because
know?
it's considered fringe. A lot of people don't believe in, or they think that everything's okay. And I'm not saying that it's not. I mean, I'm a lot of people they base their success on different things, whether it's a job, it's education, and what have you. But you said a very important thing. You said that okay, that you pretty much want to be financially free. And I think a lot of people don't understand what financial freedom is. You don't necessarily have to be okay, a millionaire or a billionaire to be financially free. Financially free, all that means is that, okay, you can live, okay, within your means and not have to owe anybody. Okay, a lot of people don't understand is you can be financially free if you have certain degree of assets, you have stocks, you have money creating money for you. So that's the big picture, and I think that a lot of people kind of miss that. And what they do is they look at distractions and they create doubt in their mind. Like you just said it, the headphones, the toys, the cars, the lifestyle, that becomes almost a distraction. Okay,
The
and I
credit
think that's
cards.
right. Credit
You
cards.
haven't said anything about credit cards, but honestly, I believe credit cards is like the hugest, topic that we should talk about because I know a lot of people that are in so much depth in credit card, and sometimes and in my website where I check my credit history, it shows that it says that I am 80% uh, higher. My credit score is 80% higher than most of the population in here. So
Right.
and I mean, it's ridiculous to know how many million of people right now owe on their credit card, and nobody does anything about it. Nobody
Right.
needs
So
to go
you're a little ahead of the game then. So if you get if you get yourself on the right track, you're already pretty much ahead of the game because you have no debt. You're
yeah,
80% better than most people. All right.
exactly,
So
and that's the
I'm
goal of
gonna
also financially being
right.
financially free. Yeah, go ahead.
Right, and that's a good thing. Now, um, one of the things I want to talk about before we get into charts and we get into setups, I want to talk about something called the law of infinite return. Okay, and the law of infinite return, okay, what it means is basically that, okay, the law of infinitely getting a return back. Okay, you started with how much money, if you don't mind me asking?
200.
$200. Okay, and from that point on, okay, now you currently have 6,000. Now, whether you took out money or you paid some different things, you're infinitely growing that $200 initial investment. So you're actually using this law of infinite return. And the reason why I speak about the law of infinite return is because regular people, okay, regular Joes that work um, in a job or they work construction, they work in a school, or they're a police officer, they're not practicing the law of infinite return. What they do is they provide a service, okay, whether they're a cop, they put on the uniform, they go work a 9 to 5, they got to work overtime, okay, they're putting into something, okay, but they're not getting an infinite return because at any point they could stop working, they can get hurt, and then that money stops. But now, case in point for you, you started out with $200 and you initially, okay, started with a little bit and now you're infinitely growing that. Okay. Now, I want people to understand this, okay, because it's very, very important for people to understand this basis. Because when you can understand this basis or this this law of infinite return, the thing is that you will get less emotional towards money that you have. Okay, you understand that what you're using now is you're using money, okay, as a leverage. Okay, and that's the most important thing that you can actually learn in life, that you don't necessarily have to, you know go work, okay, for that money. You can actually put that money to work, and a lot of people don't want people to know this secret because, you know these big boys, or we're talking about the 1%, they're the 1%, and they're the 1% for a reason, and they don't want you to know these things, okay, because they want you in their pocket. Okay, you guys pay taxes. Okay, you go to work. Okay, for a boss, and his whole thing is to make money off of you. Okay, okay, you can go through different books. You can read up on books, diaries of economic hitmen. I mean, this is pretty much how life works. But you have to understand, and you have to get yourself out of that paradigm. And this is very important because now if you can take $200 and make that infinitely and keep on growing that, okay, what you're going to end up doing is you're going to build assets, okay, you're going to decrease debt, and then what you're going to do is, okay, in the longer term, you're going to survive solely, on your money making money for you. Okay, and this is the big picture that I want people to understand. Okay, so when you do take that risk, okay, that $500 risk, okay, you don't mind anymore because you started out with an initial investment, and now that's grown infinitely, and it's going to continue infinitely because until you're here, that's the plan that you're gonna keep on doing.
Yep.
Okay,
Right.
so this is very important. Okay, I want people to understand these guys like Mark Cuban. You know, he was a self-made maverick. Okay, um, he did this. He did just that. When he went to school, okay, he quit school. Okay, guys like Steve Jobs, they quit school because they take on risks. Okay, but they infinitely continue continue that and make their money. Okay, make money for them. When Mark Cuban, okay, started out, he worked as a manager for a bar, and he made that bar a lot of money. Okay, I don't know if it was millions, but then he met up with a couple of guys and came up with an idea for broadcast TV. Now, when he went to broadcast TV, okay, his whole thing was to do broadcast TV. Yahoo came and said, we want this, okay, and they offered him, I believe it was like $5 million, okay, and he said, no, he said, I don't want that. How about you give me $5 million in company stock? Okay, he was looking at the big picture. He was going to say, you know what, I'm going to get stock, okay, so because I know that there's value in this company. Yeah. Well, anyway, he ended up hedging on it. At the time, I believe they gave him stock over $5 million, and they were worth $43 per share. And I guess he hedged, and the stock collapsed, and he made billions. Okay, this is a little bit more, intricate for people to understand. But what he did was, okay, he hedged on the market. He didn't work for that money. Okay, now he came out with broadcast TV, but that's not where all his money came from. It came out from that deal with Yahoo. Okay, so I want traders to understand this concept, and this is why we do this. Okay, it's very important to understand. You need to have, okay, you need to realize that you need a mentor. You need to understand that that's one of the biggest secrets to have. Okay, you have to understand what the big picture is. Okay, and the law of infinite return. Okay, if I'm going to, put in this amount of money, okay, I'm going to infinitely grow this. I'm never going to quit. Okay, because $200, $300 isn't worth anything to me. It's only worth something when it grows, and then I start buying assets. Okay, because money, we all know what money is. It's inflated and it's controlled by the Federal Reserve. Okay, so this is an important concept for you guys to understand, and I know that I go over this a lot, and some people are, this guy's just just giving us talking points, but this is very important. When you get into trading, you get into options trading, this is something that you really have to understand. It's not all about the stocks and charts and stuff like that. You have to understand what the big picture is. Okay, so there's three sides to every coin, okay? And intelligence exists on the edge, okay? You don't want to be on the heads or the tail side. You want to be on the edge, okay? You want to be on the cutting edge, ahead of everybody, okay? And you see these guys on the iHubs, the forums, they start arguing with you, okay? If you argue with an idiot, okay, you have two idiots. Okay, so remember that. This isn't about arguing. This isn't about opinions. This is about setups, okay, discipline, and patience, okay? If you're following a strategy, you're following rules, this is the rule that you follow. Okay, you don't go on iHub and start arguing with other guys, okay? It's senseless to do that. So if you argue with an idiot, you have two idiots, and this is how the secrets, okay, these are basically the secrets of the rich, okay? And another secret is the rich make promises for income, okay? So what they do is they make promises for income, and they buy promises for protection. Okay, so understand hedge. Why do I tell people to start buying silver? Why do I tell people to look into Bitcoin? Why do I tell people to look into trends? Okay, this is very, very important for you guys to understand. There's a reasoning for why we buy these stocks, okay, and why we enter at the levels that we enter. and why we don't enter at the levels that we enter, and why we stop when we have to stop. Okay. So Mark, do you understand the gist of some of the things that I'm telling you and why I'm telling you?
Yes,
Because
yes, of course.
psychology is very, very important when it comes to trading. Okay.
Um,
So, you have any questions on anything that we
yeah,
spoke on?
yeah, Maud. I would like to add something. You said a little bit of my opinion regarding the money. That what I seen most of the people do. Um, a lot of people look at money as their like God. I feel like people are scared to take a risk or to do something with the money. Like every time you tell people to go invest your $200, they always think, wow, $200 that I worked so hard, go risk. And no, I can't. I rather go buy myself a Dr. Beats headphones that I can listen, you know, music to a year, within a year. But but the thing is that they don't understand that the money is just a tool, like tool that we use like a pen, tool
Right.
money like to work with. And what if you will take that $200 that you wanted to buy Dr. Beats headphones, invest it in a stock, make that $200 into 400. Okay, you can then go ahead and buy yourself your Dr. Beat headphones, but yet you have another 200 that you can continue grow. So from this 200 you can make another 400, from 400 to 800, and you still can enjoy your Beats headphones.
Right.
But why would you buy Beats headphones and just and then or buy headphones when you're in depth or something. And I know a lot of people do that. They have like credit card bills, but yet they go and they buy themselves a headsets or headphones, and
Right.
and I
We're a
think this is
credit.
very
Right.
go ahead.
We're a credit based nation. So a lot of people, what they do is, they buy stuff on credit, and this is just the way we've been brought up. So, is it ignorance to a certain degree? It is. Okay, but at the same time, you have to break away from those chains. Okay, we are impulse buyers. You know what I mean? You'll buy into something very quick. Okay, because a lot of people just want, the fast, easy money. Okay, so the thing is
That's
that,
correct. Yes.
education is paramount. I think that this is what we offer you guys. If you go over to another company, or let's say, and I'm not in competition with anybody, because I know what I give to my members, and I know some people they don't want to do the part. They just want to open up an email and buy a stock. That's not what I do here. And and this is unfortunate because you have to be proactive on this. You cannot be lazy in this game. Okay, because let's take for instance today. Okay, I'm gonna go on the GroupMe chat. It's actually what we use. We also use we also use the Skype chat to get these message boards to our guys. So some of the things that we offer is personalized. So you guys are in the mix in the beginning. Okay. So some of the guys I notice won't wake up early. Okay. I was in the military for a little bit. I was in the military for a little bit, and um, the thing about the military, they teach you discipline. Okay, and it's one of the disciplines they used to tell me is if you're on time, you're late. So you should be, up and ready to go early in the morning. Okay, because the beauty of being early in the morning is there's a saying, the early bird gets the worm. Okay, so I don't know if you saw it, but today we had a setup in the morning, and we've had a couple of setups during the week, pre-market. Okay, what we do is we see a chart, okay, and we see news, and we give that out to our members. Okay, one of those stocks was FLST. Okay, and now let me just go over the FLST trade. Okay, FLST was given to members. Okay, on news. Okay, right here at this entry, right over here at 11. Okay, and the way I actually spotted this, okay, I'm going to go to the Facebook because we usually utilize Facebook. I always update on Facebook. Okay, the setup is there, given early. I believe it was like I gave it like 9 in the morning when the news came out. And I think that it's very important to understand this. This is not just a guessing game for us, because what we usually do is I have a couple of traders that look over stocks, okay, and we'll get news, and then I'll look at the at the chart, and I'll look at the level too, and we'll decipher a trade. Okay, so the way we looked at the FLST was it announced 1 million, okay, in financing, okay, and that stock was trading at 9 to 11, okay, and the previous day before or the night before we had a Sunday meeting, which some traders sometimes attend and some don't, but there's quality, okay, information in there, and from that, okay, we actually saw the levels, okay, we talked about, okay, the 9 to 11 entry, okay, so just want to bring this up, okay, it's right. Okay, so this was yesterday, okay, over here you see yesterday, okay, I said good morning all, okay, I gave the scalp trade FLST 0009 to 11, we got a stop close below 9, okay, and our target was 15 to 23, and this was the reason, okay, news, fuel stream signs term sheet for revolving line of credit, and then I offered and I gave this chart. You can't really see the chart here, but I think I posted the chart here. Just give me 1 second. Let me see if I got the chart here. Give me 1 second. Okay, here it was. Here it is. Okay, so this was the scalp here. Okay, the scalp trade was FLST at 0009 to 11, stop close below 0009, and our target was 15 to 23 on news. Okay, and this was the reason that I gave. Okay, we were consolidating here at the 11 mark. Okay, and if you look, okay, last time it was at 10 or 11, we saw a high here. Okay, and we hit a high of 41. So what I did was, okay, I noticed we're at 10 now. So it gives us an opportunity to buy from 9 to 11. So pre-market, you can actually place your bids. Okay, pre-market. Okay, you come over here. Okay, let's say we wanted FLST. Let's see if I'm still logged on. Okay, and what you can do is you can buy an order. Okay, you'll go over here and pre-market. This is before even the market comes in. I'll go ahead and I'll place my bid. And since I want to get in at 10, I'll place my bid. Good for 60 days or whatever. And then there's my bid. Okay, FLST at 10 for $309, and I'll place my order. Okay, and that's it. Okay. Anyway, on that day, okay, and on that day, which was 2 days ago, we saw a low of 9. Okay, and then it hit a high of 17. That was for a 60% scalp. It closed, pulled back. Okay, hit a low of 11. Okay, and then it hit a high of 19, I believe. Okay, so you would have had 2 opportunities to trade that stock in that range. Okay, and this was an opportunity that was given to members pre-market. Okay, this was the setup. If you would have woke up nice and early, you guys would have placed your bids. Now, okay, now let's get back to the big picture. I know some people will be a little nervous. So how do you know, Mod, that this is going to happen? Okay, Mod, I'm nervous. I don't know whether to buy this stock at this price. What if that news doesn't do anything for me? Now, typically, I can understand that sentiment. You know, you're a little nervous. Okay, it's 9 o'clock in the morning. You haven't had your coffee. Okay, but if you look at this, okay, this is what I call the return of the scene of the crime here. When it hits 10 or 11, it bases very, very nicely. And if you look at here, it's never really closed below this level. So it was already a probability that this stock had room to go higher. So you were taking pretty much a 10 to 20% risk. Let's say you were using $300. Okay, you're only taking in about $100 risk. And remember, we're traders, so we're allocating risk. If the stock would have not done anything, we would have gotten out with a small loss, maybe a broker fee, or maybe a loss at 10%, which would have been $30. So these are the risks that you take. Okay. Now, if you come over here, today we actually had another one. We had the PGCX trade. Okay. We had a couple actually. SLIO. We had also the INVA trade, which was given out SMS yesterday, and it gave opportunity to enter at 7, hit a high of 12. But the main thing is that you're given levels where you can actually, okay, place a bid and look for entry. Okay, so do you have any questions, Kafka? We're talking about. Were you able to enter any of those trades?
Yeah, yeah. I catch up. I
Okay,
understand everything you're saying.
right.
Everything's good.
So this was at 9:23 a.m. today. We had a scalp day trade on PGCX. Okay, our entry was from 0.01 to 0.013. Okay, our scalp was on the news, and our target was at 0.017 to 0.02, and our stop close would have been below 0.01 on a close. Our next support would be 0.0075 to 83, and then I gave you guys the chart, and this is the chart. This is how it looks. Okay, so I did the fib retrace for the bottom, okay, to the high move, and then I figured if I'm getting into this stock, I'm going to try to get in at 1 penny, okay, 1 cent or 0.013. Okay, so the lowest that you could have gotten this stock was at 0.0125, and it hit a high of 0.0178 for a 36% move, and it closed at 0.0154. So it's still a good trade. Even if you have PDT rules, you could have still held the stock and gotten a good entry. Likely next week, we'll have either a bullish flag pattern and a potential break above that range. Okay, so what I want traders to understand is, okay, the reason we give these levels to you guys, it's because it's systematic and it's going on the strategy that we go about. Okay, so I want traders to kind of understand that. I want to show some traders. Okay, I want to show also. Give me 1 second. It's level twos. Level twos are very, very important. Okay. Today, what I noticed on the level 2. Okay, I was watching SLIO. Okay, 0004 was its 52-week low. Okay, it was pretty much collapsing. Okay, I got the chart over here. Okay, we saw that it collapsed. Usually what I say is I look for a 3-bar drop. We didn't get that 3-bar drop. We got 1, we got 2. Okay, and then today I noticed that the stock opened at 5. I was watching this stock. Okay, I saw a huge bid at a certain point, and then I started seeing buys. Okay, I noticed that the stock was getting ready to rally. Okay, so I posted it at 11:30 a.m. Now bids, watch the SLIO bottom stock. The bottom is in. Okay, heavy on the ask, but you can retest that 001 52-week low scalp. Watch the bottom, 55 million in bid. Okay, SLIO, the buy zones 0005 to 7 could be buy zones, potential 0.001 to 0.0012. Stop close is below 6, 2 on 2 consecutive closes. And this is what I saw, and this is what I alerted to my members. Now, Kafka, as a trader, you're looking at this stock, okay? We've noticed that the stock has been beaten down. You have a huge bid, okay, here at 6, and you have 6 and 7s going, okay, what's your trade here as a trader? Would you take that trade
I
and
would
why?
buy the sevens. I would buy the sevens. I would have taken that risk
Okay,
because
and
I
why is
know
that?
the six are very heavy, meaning that there's a lot of shares at six on the bed. So knowing that it has uh, very small chance to break that six to go lower. So and the only way is to go higher because when traders would see that bid, they would want to get in. So
Right,
you know that likely that this stock will rally.
right, because that's buy pressure.
That's
So I
buy pressure.
understand that some people will look at this and say, wait a minute, this stock is up 75%. It's up 75%, but look at the low. The low is just 5. It's
Exactly.
got 24 million, so it really didn't go up higher than this. And I'm looking at this huge bid. So the likelihood of me buying sevens, okay, and maybe placing a bid at 6 is a good entry, okay, and then I could trade this a little higher. Now, I look at SLIO. It had a bullish close at the high of the day, closed at 10. Okay, so now if I take the fib retrace from this pivot low and I come up to this pivot high, we have support here at 6 and 7. Okay, now we look at the 20-day moving average, and our 20-day moving average is at 0007. Now my low today was 5. Okay, so I'm thinking higher lows. Okay, so if today was my low of 5, typically, okay, I would think that maybe you may get a higher low tomorrow. So my bid would be 6 and 7, 6 or 7 on the SLIO trade because we just closed above this 50-day moving average and this 20-day moving average. So what is that telling us? Okay, that a bottom could be in. Now, what I like doing and what I like teaching my traders is if the stock closes, okay, above a resistance level or a moving average on 2 consecutive closes, then I feel that this stock has upside. Now, tomorrow we will look for that confirmation on SLIO. You still have a trade on the SLIO. Okay. Now, my next pivot price, okay, is this 100-day moving average right here at 12. Okay. If it breaks above that, then my next target is 15. Now, I don't tell my traders where to get out. Okay. I don't give them exits, but it's up to the trader to decide for what's their risk management and what's their profit margin. Okay. So this is what you as a trader and understanding your mentorship, understanding your risk assessment, understanding your big picture. This is something that you guys have to implement as a team and as a trader. Okay. But this is a good trade. Now let's take a look at the INVA trade. Okay. What I was looking on the INVA trade was this. It's in a bad downtrend. Okay. Okay. You can't. I mean, some people will look at this trade and say, no, I'm not getting into this trade. Okay. So with that said, okay, traders have to understand that, you buy a stock when it's hated, okay, when it's bloody, this is the time to actually start looking at a trade. Because what you want to do is you want to get in on a trade, okay, at its cheapest price. And what I saw from INVA, okay, is that 11 mark. Every time it hits that 11 or 10 range, okay, that's what I call the return to the scene of the crime. When it hits 11 over here or 10, it hits a high of 26. It hits a low over here, okay. At 12, it hits a high of 18, okay. When it hits this level down here at 8, then it jumps up to 18. And right now, okay, this bottom trend, okay, or this what I call the wedge, it's broken above this level. Okay, today we saw a high of 12. I think this was given out on SMS at 7 and 8 because we were just breaking above that 20 and 50-day moving average. And if you can see here, the 20-day moving average and the 50-day moving average are about to cross. Now, if you look at the MACD, it's curling up. Now, what I typically look at is this. This is the most important thing. Do we have a bearish topping tail here? Yeah. But what you have to take into consideration, it's still coming on top of this this support. So if I was buying this stock, I would place my bids from 7 to 8. Okay, my pivot price would be 12. Okay, a close above this level to confirm a reversal higher, and my next support would be 5 and 6. So if this stock would break this level, okay, 6, I would get out. And why is that? Because then it will continue its downtrend. This will be a failed attempt, but it's still breaking above this level, and you have two closes above this moving average. So this is what I see as a trade. Okay. So now, any questions, Marco? Some of the things that we went over, any lines that we're looking at?
No, everything is actually. Well, my question is, how would you choose? You see those three lines you have at 12, 18, and 26.
Right.
You always see that you always check the toppest the toppest level it ever got, and you just retrieve them. Or how do you do those lines? I understand
Okay. Well. Okay. What I look at some people do it different. I pretty much try to stay a little bit as basic as possible. What I look at is where, the toppest range, where lines meet. This is telling you, or psychological levels, that people enter this stock. So a lot of people enter this stock at this price range. You see here, this price range. So typically, either they're holding, and they want to break even. So that becomes resistance. That's like me telling you, I bought this stock at this price, and if it gets back to this price, I'm going to sell to get my money back. Okay, this is the psychological resistance that you see. This is why I put those lines there, so you know that, that 12 mark is that psychological number. And if you noticed, when we got to this 12 today, a lot of people were selling at this price. Now, it was all retail, and a good buy pressure would have made the stock move higher. But the problem is the people that bought at 12 were like, uh-oh, and then they started selling because they were thinking, oh, this stock is going to collapse. Because a lot of people, what they do is they become nervous, okay? Now, they don't understand the levels, because what they're doing is they're usually looking at Twitter, or they're seeing an email, and they'll just buy the stock because they think, oh, this is going to be the next big thing. But you guys as traders understand the levels. We know that we closed above the 20 and the 50-day moving average. We know that we're trading above those levels. So this is master support, okay? So typically what we want to do is we want to close near that high of the day. That's what RSP traders are thinking, okay? Now, if the stock closes above 12 on 2 consecutive closes, that means that now that 12 that used to be resistance, now it may act as support, because now the stock will start trading in a bullish pattern between 10 and 12. And what do I tell my traders? Remember, when you get to even numbers, whether it's 10, 11, 9, 10, 11, okay, that's a probability zone, because now what you can do is you can buy it at 9, 10, or 11, and then put your stop right at 90, at 0009. Now you're only risking 20% on a move higher. And if you notice, a lot of people were placing their bids today between 8 and 9. They said, they understood that concept, okay? So now, if this stock continues a bullish pattern sideways, okay, what you have is a bull flag setup, because now this stock is trading above the 20 and the 50-day moving average, okay, and it usually will do it. It will consolidate and then move a little higher, okay. Now, if it breaks below this trend line here, it's a failed attempt, and usually what I tell my traders to do is to stop out.
Perfect, beautiful.
But But the problem is, with a lot of people, sometimes they just will not stop out. And why is that? Because
they hope.
The ego comes in.
Ego, or they hope, yeah.
They hope.
Yeah, they always hope. Oh, it's gonna go higher. A little bit in now, right now.
Right.
But you need rules. You gotta be robotic. You need to have your stop close. And
that's correct. That's very, very correct. You have to be robotic in the sense.
Exactly.
Right. Right. Now let's take a look at the MLHC trade. Okay. A lot of people will say, oh, okay, but you're just a flipper. We're not a flipper. We're not a flipper. We're looking at levels of master support, and what we're doing is we're trading that stock to the buy zone that we're trying to make that profit. And I sent this stock out, and we told members to watch that 11 to 12 range. Okay. And what did it do? It hit this 12 range. we saw a high of 21. Pulled back, hit that 11 range, we saw a high of 16. Pulled back, okay, to 11 again, and we closed at a high of 15. These are called waves, wave trading. Right now, this stock is basing. Okay, you could have easily made, okay, about close to 150, 160% on this trade, MLHC alone. Okay, because these are the trading patterns that it's doing. And if you remember stocks like ECOG, okay, other stocks, when a stock consolidates in a pattern for so long and it doesn't break support, that stock usually goes higher. We saw that with the stock with FRTD. Okay, we saw that stock, that same move with AMMX, a stock with EXMT. Okay, let me just show you guys a stock right now that I'm really bullish on. A lot of people sometimes are overlooking it. Is ITKH. Okay, maybe some people will say, hey, but this stock has no volume. Okay, this stock is not doing anything, but I see it doing something. Okay, because what we're seeing here is higher lows, and this is a bullish signal. Okay. Now, fundamentally, is this stock having has news and it has revenue news? Okay, but this is the trend that I'm seeing. Okay, yeah, did it break down? Right, it went to 55 and it's broken down. But now you can see that traders are coming in and they're buying this stock. Okay, we break above 19. Now we have upside to about 55. This is the risk that you take as traders. And right now you're holding a beautiful trend line right here above that 20-day moving average. Once this 20-day moving average hits this 50-day moving average, it's a cross. Okay, that's a bullish, okay, signal. Okay, you got a golden cross where you have the 100-day moving average at 17, you got the 20-day moving average at 15, and the 50-day moving average at 17. Now, my risk is buying this stock at between 12 and 15, okay, risking 20, 30%, or this stock going to 55, what are we talking about? The law of infinite return. Okay, I'm going to risk buying this stock from 12 to 15 with a stop close below 12 on 2 consecutive closes, which it's holding because for the past couple of days and weeks, it's been holding above that level. Now, when the stock breaks above 19, guess what? Company releases news. If that, speculation, and you get Axiologics merger news or updates or revenues. I believe 10Q is supposed to be coming out soon. The stock goes to 55, and then they start saying, everybody starts trying to get the credit or take the credit, which I don't care. You know what I mean? It's not about that. You want to buy these setups before they start moving, before the hype. Okay, because there's too many newsletters out there, okay, that do the same thing. Okay, so do you have any questions with the ITKH trade and some of the things that I spoke about here?
No, I love the chart. Actually, I was just thinking about it. It looks very good.
Right, because if you notice, it did the same. Look at this same move. Look at this same move. It's the same move. Right. Look at this move right here. It's the same move.
As you said previously, consolidating sideways, and luckily it will do a move higher.
Okay, can the stock break below 12? Yeah, it can.
Of course, yeah.
It can. Anything can happen. But what we're looking at is the trend right now. We got higher lows, and we have continual buying here on ITKH, and the chart is looking very, very good because it had the similar move here. Okay, and then we saw a high of 55. Stocks are like vacationers. Okay, if they go to a place and they like it, they'll go back. Okay, so I just want traders to kind of look at that concept. Now, I want to kind of look at. Let me get on my Twitter. Okay, today we posted a stock. Okay, I sent it out. ECAU. Okay. ECAU, we had a low of 17, okay, and it was at 25 now. Watch the reversal confirmation. This is when I send it out to my members, okay, at 18. Okay, what I told my members is watch this level. I think it touched a low of 16 and it gave opportunity to buy at between 16, 17, and 18. I think most guys got in 17, 18, and 19. Okay, ECAU 16 low, 21 up, bullish reversal. And what do I mean by a bullish reversal? Okay, I want traders to kind of look at this ECAU. Okay, whenever a stock, okay, sees a low and closes at a high of the day, that's a bullish reversal signal. Okay, so traders, okay, will panic, and they'll not abide by stops, or they'll start panicking, and this is exactly what happens on panic. You'll see a low of 16 and a close at the high of the day. Look at this huge, okay, volume reversal day. This is a key signal. Now, if the stock closes above 25 tomorrow, you have a confirmation. And the beauty of this stock is just has plenty of room. Okay, RSI is just 26. Okay, we got the bottom of the Keltner channel at 54, which is 100% from the level. Okay, and now look at this. I want to just show you guys this, because this is what I give my members at Radio Silent Play. Okay, we'll give you guys the setups and we'll give you guys the charts. Okay, let's take a look at this chart right here. Okay, this is that downward divergence, okay, that we're seeing here. Okay, now from that level, okay, if you put in, okay, and check the resistance, I'm seeing like main resistance over here at 0.0123. So what you're telling me, okay, or what I'm telling you, again, we're going back to the law of infinite return. We are risking about 20 to 30% here that it's going to hold this bottom to about 0.012. Now, what's 20 into 0.012? It's about 500%. So if I told you, you know what? Give me $300 now. Risk losing $20 or $30 or $50, maybe even $100, but you're risking to make 500% of those $300. Would you take it, Mark?
Yes, of course. That's what I've been doing for the past 2 years.
Okay, so this is the thing that as Kafka said, okay, he's going to take on this risk, buying it around this range and looking for this first major resistance. Okay, now let's take a look at where that closed today. It closed at 25. Okay, and if you go over to Twitter now, okay, let's see what the Twitter heads are saying right now. Take a look at AMD's position to ECAU. Can't get any more textbook than that. Hammer volume, ECAL. So everybody's posting on it now. ECAL, BBRD, possible morning gappers. And that's exactly what it's probably gonna gap up, because the people are gonna say, oh man, the bottom's in. I better get in on this. ECAL for a bounce. Okay, and this is where we're at. Here we are. This is a level 2 that I sent out to the members. Okay? And this is stuff that you guys are going to get. Okay? So I want traders to understand that the big picture. The big picture is we're going to take an amount of money to grow that investment, and we're going to have to take on risk. Okay? Understand the mentorship. Okay, do this one-on-one, just like what I'm doing with Kafka here. All right. Okay, because this is what's going to make you a better trader. Okay. Now let's take a look at something over here. I want to just show you guys something, because you can do this with any market. You can literally do this with any market. Okay, we're going to go over a couple of small caps here. Okay. This was a beautiful trade that we gave out on Sunday night. I actually gave it on a small cap. Okay, HENP. Our entry was at $7.90 and to $8.10, and this was the setup here. Okay, so this you'll get every Sunday night, and we'll talk about it on the meeting, and you'll get this in the website. Okay, so HZNP, and our entry was $7.90 to $8.10. Our target one would have been $8.90. Target two would have been $9.20, and potential $10. And the beauty of it, this is a NASDAQ stock. So you don't have to worry about these stocks virtually collapsing on us because our stop close is below $7.80, which is the safe zone. Okay. Now we'll come over here, HZNP. Okay, let's look at it. HZNP. Okay, Mark, what day are we in today? Kafka, what date are we in?
August 7th, 2014.
Okay, August 7th. Beautiful. So we're in August 7th right now. Okay, and if I put this box pattern, okay, we're August 7th, and that came out. When did it come out? Put this out? I believe it was Sunday, right? So it's 3 trading days. Okay, so let's come over here to HZNP. 1, 2, 3. Okay, so we would have filled right here. Okay, we could have filled any of these lows right here. Okay, at our range that we were talking about. And look at today. What did we hit a high of? Kafka. What did we hit a high of today?
1025.
1025. So if we come over to our setup page, okay, it's not that we're geniuses, but did we hit our potential target?
Yes, we did.
Okay. So see, these are some of the things that we speak about in our setups, and some of the things that I want traders to kind of understand. Now, as a trader, okay, does it always work? Are we always on point? Do we always get this thing right? No. Okay. But this is why we have setups. This is why we have disciplined entries, and we have a planned strategy going into each and every stock. Okay. Okay, so let's take a look at before Mark. I mean Kafka. Do you trade options?
I actually don't know how to. I'll be honest.
Okay, so I know a lot of guys don't.
Yeah, I started with OTC, small, penny stocks, and I kind of been focusing on that for 2 years, learning and.
Okay, because there is a market and there's opportunity for these options. Okay, and it works the same exact way as our other setups. Okay, SWN.
Do we need more money?
Okay, if we look at
something different.
What you typically need to do, okay, is you're gonna have to go through your broker and you're gonna have to request to apply for an options. Okay, usually an options account will require you to have a little bit more money into your account. I believe it's $2,500 for E-Trade, and what they'll do is, okay, you'll apply for it, and then they'll give you a response within a couple of days, or they'll ask you a couple of questions, how many years you have trading the market. They'll ask you different things based on how you opened your account, how much you make, okay, how many trades per quarter do you do, or per month, okay, and then if it meets their requirements, they'll say, okay, you qualify for options trading, and then you'll start off there. Okay, but it's basically the same thing. The only thing what you're doing is these stocks are very expensive. Okay, so let's say the SWN. Okay, let me go to Give me 1 second. Okay, so let's say I'm buying, I'm doing the setup here for, the SWN. Okay, so my entry would be, okay, $39.50 to $40. That's where typically I want to get in. So what you do, okay, since we're starting out in August 6th, you're putting what you call a down payment on that stock. So what you're doing is you're buying a price, which is your strike, okay, the price that you think that it's going to go to, and my target right here is 41. So I have a feeling it's going to go to 41 or 43, my target 1 and my target 2. And then I have a date. I'm saying that, you know what, I think that this stock is going to hit this by September. Okay, so what I'll do is I'll go into my account, okay, and I'll put in the symbol, okay. Now let's SWN, okay. I'm over here, SWN, and then I want to buy the calls because I'm saying that the stock is going to go up, okay, because over here it says get in at $39.50 and your target is at 41. So I'm going to come over here, right, and I'm going to hit go. Okay, you can also do this with your platform. Okay, so right now it's $39.48. Okay, so $39.48, and let's go look at our setup. This is say to get in at $39.50, correct?
Yes.
Kafka, you're seeing this, right?
Yes, of course.
So why are we doing this? Let's look at the chart. If you connect this pivot low with these pivot lows, you have a strong trend right here at the 100-day moving average. So every time it hits this level or it kisses it, it'll go up. It kissed it over here, it went up. Kissed it over here, it went up. Okay, over here it almost tested it, went up. Over here it tested it and then went really up. So now I'm saying is SWN, I like this at this buy range. Okay, so I'm gonna come over here. Okay, and my target is 43. So I'm gonna hit a strike of, let's say, 42. Okay, and I'm gonna come over here for September 20th. So I'm saying by September 20th, my stock is gonna hit 42. So I'll come here. Okay, I'll place a trade. I'm sorry, this got logged out. Let me know if you have any questions, Kafka.
No, great. So
okay, so you saw that SWN. That's our entry, right? That's our symbol. We're gonna come over here. We're gonna buy calls. Okay, buy to open. Okay, I'm gonna buy 5 contracts. Okay, my strike price is gonna be 42. Okay, and it's a call. Okay, and I'm gonna put a limit order on it. Right now, they're asking 59 cents. Okay, and I'm going to say, you know what? I want to buy this, but not at 50 cents. I want to buy it at 45 cents. Okay, good for the day. I'm going to go over here, preview order. Okay, let's say, okay, look, good for 60 days. Okay, I don't know why it's doing this though. Okay, there was some with margin, but I'm going to go to another account. I apologize for that. So let me just do it with same move. For some reason, that account doesn't have. Okay, let's do the same trade over here. I apologize for that. That faux pas over here. We're going to do the same thing. Okay, SWN. We're going to come over here. SWN. Okay, we're going to buy the calls because it's going to go up. Okay, and what we're going to look at is September 20th. Okay, because we're saying that that stock is going to go up to 42 by September 20th. Okay, this is our strike price. Okay, our bid is 55 and our ask is 59. I'm going to come over here. I'm going to trade it. Okay, I'm going to buy to open. I'm going to buy 5 contracts. Okay, the limit price. And I'm going to buy these at 45 cents. Okay, I'm going to come over here, preview order, and there we go. Okay, so those 5 contracts are going to cost me $238. Okay, and because I'm just grabbing a starter, my starter will be 5 contracts. Okay, SWN for September 20th, 2014, and my strike price is going to be $42. I'll come in here and I'll place my order there.
Mode, what are the contracts? How do you determine the contracts? Do they divide? I mean, usually in penny stocks, you have the shares that you divide by the money, or and you get the price. But how do you calculate the contracts?
Okay, so this is how contracts work. Typically, what you're doing is you're buying, okay, or putting a down payment on how many shares you're gonna buy. How many contracts you're gonna buy per contract. There's 100 shares. Okay, so if you come over here and you look at the price on the SWN right now, this stock is trading at $40. Okay, so now if you wanted to buy, let's say, 1,000 shares at $40, it would cost you $40,000. So that's a lot of money to put into this stock. So what people or what financial institutions did was they gave you the opportunity to actually buy these stocks, but through contracts. So when you buy a contract, every contract has 100 shares. Okay, so if I buy 1 contract of SWN, that means that I have 100 shares of SWN. The only thing is that I'm putting a down payment on that stock. So when I come over here, what you're actually buying is you're buying contracts that are saying, you know what, I want to buy this stock, okay? And if it goes to $42, I'm only paying $39, okay? Because I bought this when the price was at $39. But now I can sell it to somebody that's willing to buy it at $42. You understand what I'm saying? Now, let me give you an example. Let's say you go to, you're going to go buy a suit, okay? And you go into the Men's Warehouse, or you go anywhere where they sell custom-made suits, and you go into the suit tailor and you say, I like that suit, sir. I would like to buy that suit, but I don't have the money now, okay? And then he goes, okay, I can give you the suit, but you can buy it on layaway. That means that if you give me a down payment, okay, I'll sell you a contract, which is what I'm showing you now, a contract, that you can buy this suit at $200, okay? Now you're going to give me $20, which is the premium, which is this 45 cents, okay, the premium. And now if on Friday, which is the expiration date, September 20, 2014, you're going to give me that money, what you owe me. Okay, now this is where the tricky part comes out. What's your favorite singer, Kafka? Do you have a favorite singer or favorite actor or anybody that you think is famous?
Well, I listen to techno. I like Tiesto.
Okay, so let's say Tiesto goes in there. He has a lot of fans, and you see Tiesto performing on TV, and he wears that same suit that you just gave that man $20 down payment, and he was going to sell it to you for $200. And now this guy Tiesto is wearing that suit at the Grammys. Come Thursday, you're going to go give him his money, and you see all these people waiting in line, and they want to buy that suit. But you have the contract to buy that suit for $200. Now you say, you know what, I don't want this suit. And you go to that line, okay? And now one of the guys says, you know what, I'll give you $1,000 for that suit. You pay $20 for that. All you have to do is give him the paper, okay? You pay $20. You just made $980 on that trade. Because now he has the paper, and he could go in there, and he could buy that for $200. You don't have to pay for that no more, okay? Because you sold them your contract. You understand what I'm saying?
Right, yeah.
Okay, so what we're doing here is we're buying 5 contracts. Now, I want you to understand this. If, okay, this stock, SWN, hits 44, okay, 44 by September 20th or before September 20th, we can sell it. And now, okay, Kafka, this price that we paid 45 cents, it may be $1. It may be $2 now. Because those people want to buy it off of you now. The contracts go up in value. Okay, now, let's say I'm wrong. Let's say the stock goes all the way down to 36. Okay, and you don't sell it by the expiration date. You lose all your money. This $238, you lose it all. Okay, but we have stops. What stop here? What does it say, Kappa?
38.70.
Okay, so now if the stock closes below 38.70 on 2 consecutive closes, what do?
You get out.
You get out. Okay. Now, if the stock doesn't close below 38.70, okay, and it hits a high of 44, what do?
I sell it.
You sell it for profit.
Yeah.
Okay, so now let's do another one. Okay.
What if
yeah.
it gets higher on not September but by December, or maybe it gets to 42 by August. Maybe tomorrow is gonna hit the high of 50, or
you can sell it.
So what are the expirations for though? What are the
expiration means this is how much time you have until you can that's how much time you have
to sell the
okay
stock.
To sell the stock. No, it doesn't. It could happen in 5 minutes. It could happen in 30 minutes. And if it hits your price, you can sell it right away.
So, but what happens after the September 20th? I'm not able to sell it anymore?
Okay, if September 20th comes and you have not sold the stock, you lose your entire investment. You lose $238. But remember, what's the big picture, Kafka? What's the big picture?
I'm losing.
What are we risking?
10. I'm not sure how much percent.
What we're risking. Look where we're at, Kafka. We're right at this trend line. So we're risking only a little bit compared to the reward, where we're saying that this is going to hit 44 for a nice bounce.
Mode, one more question. What if I say that it's going to hit on December? Why can't I just make it until next year or something?
Yeah, you could. Definitely. Let's take a look at that. That's a great question.
So why would I risk 2 months when maybe it's going to be 3 months? So
exactly.
Right.
This is
Okay.
this is a very, very important thing. Now, what I tell my guys is usually to go 1 to 3 months outside the date. Okay, so let's say you buy, right? Your expiration date is going to be, we're going to buy the calls, okay, and your expiration date, start this over. Okay, SWN, okay, and we're going to go calls, right? Place a trade. SWN. We're going to buy to open. We're going to buy 5 contracts. We're going calls. And we're going to go, you said you want to buy December, right?
Yeah.
Okay. And our strike is going to be the same thing, $42.
Two.
Okay, now look at the price. Kafka, look at the price. You see how it went up?
Yeah.
You know why you're paying more?
Because you have higher chance of selling it higher.
Yes. You're paying premium. So I'm going to come here and I'm going to put $1.30. This is what I want, $1.30. I come here, I preview my order. Okay, I'm buying a call. Okay, for December, my strike price is going to be 5 contracts. Okay, $1.30. Good for the day. And then I hit preview order.
Right, I see.
Okay, you see that? $663. This is how much we're paying. Okay?
But then yet you know if it's gonna get higher, but you can make those money kind of back.
Right,
I mean,
right.
there's a higher risk. You're right, but now if it goes 10%, 20%, now we're counting from the 600, 10% rather than
Right.
500, 10%.
And remember, options, okay, options can go up drastically. You can buy a option at 10 cents, 20 cents, and it can go to $20. Okay. All right. So that's pretty much options. I'm gonna do this with you guys. I'm gonna do this with you guys more. Okay, and I'm gonna do more of these videos for you guys. All right. Right now I gotta cut it short because I actually gotta do a couple of things. But with that said, if you have any questions, comments, I think that, what do you think about options? They're not that difficult, correct?
I mean, I believe the practice makes it perfect. I mean, it's first time I see it. For me, it is a
Right.
little bit difficult. I mean, for me to see, to practice maybe 1, 2 time and to see,
Right.
doing that for you to do that one more time.
But you do understand the setup story. You do understand how the setups
the
work.
setups, yeah, of course, yes.
Okay. All right. Good.
Hmm.
I'll work with you guys a little bit more. Okay. Look at corn. $25.50 was our entry. Okay. And it's actually right at that buy zone. Look, RSI, same thing like we do with the penny stocks. RSI is down here. Okay. Now let's take a look at what corn is doing now. This is actually a good level to start buying corn. And this you can buy it till December. Look at right now, 26.20, and it's holding a beautiful pattern right here. Okay, so it's still got good entry right here because our target is 29 on the corn. Okay, which is this 50-day moving average. If this thing breaks above 26.60, watch out. You'll get up to 29. All right. So I want you guys. I'm gonna keep on teaching you guys. I'm gonna put out these videos so you guys can understand how we set these up, and any questions you guys ever have, we'll keep on doing these one-on-ones. All right. I will post this video for members on YouTube, So if you have any other questions, Kafka, just keep me posted.
All right. Thank you very much.
All right, thank you. I appreciate your time as well, Kafka, and good luck.
Thank you very much. You too.
All right, take care.
You too.